Should I ever consider closing accounts with tax consequences to just simplify the amount of accounts I have in my financial life?
So, yeah, you got a bunch of accounts, and or maybe not, maybe more than you want, and you're just trying to make things simpler. And so, as you close accounts, something triggers a taxable event, right?
Yeah.
Ooh, it really depends on the amount, right? I mean, $1,000 is one thing, taxable income. 500,000. Yeah, there's a dollar amount there that's too high,
Yeah.
even for trying to simplify your life. So, if there's there could be zero cost to do it, right?
Yeah. So you should look
Tax wise.
if you have accounts that are the similar. Say you have two trust accounts at two different brokers and you want to simplify. You can look to see if you can do a like-to-like transfer. That
Yeah,
way you have no taxable
right,
event.
right,
But let's say you have an annuity and you also have a trust account. They're both named in the name of the trust, but to move the annuity into that other trust account, you'd have to surrender
right.
the annuity. So that would be a taxable event. So not all simplification causes taxable events,
Right.
but you should evaluate each one by itself.
Yeah, I had a story from a client from years ago who was, very thrifty. Was a really good investor, actually. She did really well. But one of the things that she really liked was back in the day, you could open up accounts at the bank, and they were giving away things to open up an account, a
Hmm.
toaster or whatever. And so she had like I don't know, maybe 30 passbooks that she showed me one time for all these accounts she'd opened up with kind of the minimum amount of money to get all these things. And so, I mean, that's going to be a bear for somebody to deal with as far as that goes. So it's nice to kind of simplify that. And, I've also seen situations where um, um, a guy that worked for a oil company, he got a little bit of a royalty from every drilling well that his company did, and he might have had like 120 of them,
Hmm.
and it was great. It was good income. It was kind of nice, but he ended up selling that whole thing after he retired to somebody at the company, just because it was going to be a nightmare for whoever got that as a beneficiary to go
Hmm.
through and re-register, 'cause every single one was sort of like a different security. So,
Hmm.
sometimes there are things that are just really worth doing just from a simplification standpoint for everybody, not just for you, but for your estate settlement also. But yeah, not everything has taxable consequences. Make sure you know which ones do, and try to figure out whether it's worth it to you or not, or how you might be able to even avoid that tax if possible. Yeah, good question.